Up next, let's shift our attention over to the grain markets, and joining us on the Market Journal desk is Jeff Peterson. Good to see you, sir.
Oh, it's always great to be here, Bryce.
Let's talk about a question that's been circulating this week. Is the harvest low in place? As a lot of corn is starting to come out. Let's start on the corn front. Your thoughts there, Jeff?
You know, what's always interesting this time of year, once we get past that September WASDE report, we've had a chance for them to get out in the fields. You know, they went out and they set up about 3,000 plots between corn and beans and got their in-field observations. And I kind of breathed a sigh of relief when we got that 183.6 and the 53.2 in the yields, even though that was up a half bushel on the corn. But I think since it wasn't higher, I think that means that we do and have seen the lows on both corn and beans. Now, what could be the exception to that is that if for some reason, as the combines get into the field, they ultimately end up finding some bigger yields, and obviously that isn't the case. But I think what we're going to find, though, as they get out there and as they start working in these fields, start pulling in some of this crop, it's going to be a good crop, but because of those dry conditions we had, I think what it ended up doing is it shortened up the fill just a little bit, going to hurt the test weight a little bit. I think it also ended up impacting the fill in those soybeans too, Bryce.
Okay, let's talk about something else that's getting the attention this week. As you and I are recording here on Wednesday, Federal Reserve came out. They're lowering interest rates for the first time in 4 years. How will that news impact the agriculture industry? Yeah,
so what it looks like, you know, they chose to go with the half-point cut on the interest rates as opposed to the quarter, is what a lot of people were thinking, maybe quarter. But sentiment this morning looked like it was going to be a half-point cut. Overall, that'll be positive for the grain markets overall, and the reason it'll be positive, it's not a lot. It just gives us a nice little tailwind behind us, but is because it should cause us to see a further reduction in the U.S. dollar index. But as we dig a little bit deeper into that U.S. dollar index, so what we have to realize is that that's very heavily weighted to the euro, and really we have to look and say, wait a minute, how does the U.S. dollar now stack up against Brazilian real? How's it also stacking up against China's currency? That'll give us a true test, but as a general rule, we'd say by cutting that rate, that'll reduce the U.S. dollar index further, which should help boost exports, all other things being equal.
Okay, well, on that topic of boosting exports, I want to bring up demand for both corn and soybeans. How does that picture look right now?
Yeah, so, you know, we watch this time of year very, very critically, and we're seeing, so let's start first on that export side and talk about that. You know, what we're finding is that the export inspection numbers that came out this past Monday, you know, really we're down a little bit from last week, but one way we assess that is we put a little pace analysis. Where do we think we're at right now versus where we've been in the past, and where does that make it that we end up? And all the indications be with that calculations that the corn export numbers are still on pace to hit what USDA believes. Over on the bean side, beans are a little bit off though. They had a decent week of export inspections, but overall they're off about 14 million bushels, and that would have been 7 million bushels of which they'd have been off the prior week. Now, as we look into that, I wouldn't get too concerned yet. We think that right now, U.S. soybeans, you know, they're the cheapest in the world right now, so we're kind of driver's seat. So as long as China needs beans, which we do believe that's going to help us. The one thing that's throwing a little bit of cold water on that, though, is the fact we're still having some problems out there with the Mississippi River. You know, when we ended up having Hurricane Francine came in, that did help bring up the levels a little bit on the Mississippi, but you know, we're still setting very closely at about 6 feet below low. Now that's nowhere near as low as we were last year. Last year it got all the way down to about 12 feet below low. What that's doing though is that's hurting our competitiveness on beans a little bit, only because we're not able to put as many soybeans on the barges, and on top of that, they're not able to put as many barges in tows, but I still think we'll come around. One other thing that's got the market's attention is the Napo crush numbers were out this last week, came in a little bit over 158 million bushels crushed for the month. Trade is looking for 171. I think that's a temporary glitch. I think going forward, the plants ended up taking some extended downtime, so going forward, I think we'll see record month-over-month crush going forward, Bryce.
Margins have to be pretty good on that front right now.
Yeah, margins are improving there. Definitely. They've got pulled back a little bit, and I think going forward here we'll see some good margins.
Okay, I want to get to a viewer question. Jeff wrote in. Jeff had a question for Jeff. How about that? He asked, what has more potential going higher over the next few months? Is it corn or soybeans?
Well, the first way we kind of attack that is we dig in and take a look at those stocks-to-use ratios. And when we look at the stocks-to-use ratio on corn, we look at the stocks-to ratio on beans, our indication would be that I think we've got more potential over on the corn side. We just are going to have more beans around. And to give you an idea, our total supply here at harvest time compared to last year, we're going to have about 400 or about 500 million bushel more soybeans around when we finish up harvesting a year ago. And that's going to kind of put a lid on the bean price. I mean, I still think we'll see the price for corn and beans work higher especially as we come out of harvest here, but it probably means that corn has the ability to go, up more than what the beans do.
Depending where people are at in the state, harvest is underway. What kind of harvest marketing strategies are you offering to people right now?
Yeah, so as we dig into that, the first thing I'd say is let's start first on corn. In some of the areas yet, some of these ethanol plants have some really good quick ship bids where they need that corn. As a result of that, if you've got a bid that's maybe 15, 20 cents better than what their posted number is for, say, like October delivery, I would go ahead and take that basis and just go on a basis contract. Or if you've got a hedge to arrive or something, you can just set the basis on that. In other situations, though, what we think is going to happen is that we think those quick ship bids, as we get a little more corn coming in, will back away. But then once everybody switches over to beans, then I think we'll see the corn basis improve a little bit. If you've got unsold bushels that you have to take to town, though, I think I would go the delayed pricing route. And then over on soybeans, I think I'd go ahead and go delayed pricing there. I don't really want to see us selling cash bushels here, Bryce.
So things to think about for sure. Jeff, final thoughts from you. What else do you want to share with us?
Yeah, I'd say the big thing right now, just really wrap your mind around where's your break-even cost. Focus very closely on if you're going to have to generate some cash. A couple ways that you can do that here at the harvest time would be, don't forget about those FSA loans that you can take on those bushels that are in the bin. That can be taken as loan or as income. And then in addition, if you need to generate some cash on bushels that are going into town, you can always go the basis contract and get an advance on some of those bushels as opposed to selling those bushels.